Yes, in the name of Almighty, the most beneficent, the most merciful, welcome to our class Financial Accounting. In this today's class, we are we are going to learn about the journal entries. So journal entries is the book of primary entry or it is the book of original entry as it is the primary step in the accounting process. Okay. So this is the format of the journal entries. First we should write the title at the top. Then we have the we have the columns of date column, particulars column, ledger folio, debit column with rupee and credit column with rupee. Okay. So here they have the question. I will post the question in a PDF format. Okay, you have to look on the question and you shall write it. So here we have the date 2000 January 1. The year is 2000. We write the year and January 1 is the first date. Okay. Business started with rupees 2,50,000 and cash deposited with bank. Okay, rupees 1,50,000. So business started with cash rupees 2,50,000. They are starting the business with 2,50,000. Of the amount 2,50,000, they are depositing a part that is 1,50,000 into bank. So here in this transaction there are two transactions are there. One is the capital introduction and another one is the cash deposit transaction. Okay. So we need to separate these transactions. So first we record the capital introduction. So as a business started with the cash rupees 2,50,000. Business started with the cash rupees 2,50,000 means here the two accounts are affected. One is the capital account and another one is the cash account. Okay. So we take the capital. Capital means it refers to the owner's capital. Owner's capital means it comes under the personal account. Okay. Personal account, what is the rule for personal account? Debit the receiver, credit the giver. Here the owner of the capital is the giver to the business. Okay, he is the giver to the business. So we are going to credit the personal account, that is the capital account. Okay, and the next one is then cash. Okay, so cash comes under real account. Real account, the rule says that debit what comes in, credit what goes out. So the cash comes into the business. So we are going to debit the cash account. So the journal entry for the first transaction, that is the business started with the cash rupees 2,50,000 is cash account debit to capital account. Okay. So amount is 2,50,000. Okay, 2,50,000 and we write the 2,50,000 and we write the narration being capital introduced. Okay, that's it, the first transaction. On the same day, this amount of 2,50,000, a part of the amount, that is 1,50,000 is deposited into bank. So we write the same date, January 1. Okay. So here the transaction is, that is the cash deposited into bank. So there are two aspects of that. Here the two accounts are affected. One is the cash account and another one is the bank account. First we take the bank. Okay. So bank account is, name of the bank comes under personal account. What is the rule says? Personal account, debit the receiver, credit the giver. Here the receiver of the amount, that is the bank is the receiver of the amount. So we are going to debit the bank account. So and the next one is the cash. Okay. So cash comes under real account, debit what comes in, credit what goes out. So here in this business, cash goes from the business to the bank. So we are going to credit that is the cash account. Okay. So here the journal entry should be bank account debit to cash account. How much? That is the 1,50,000. 1,50,000 being cash deposited into bank. Thus, we completed the second journal. Okay. And the next transaction is purchased machinery on credit from Rangan. Okay. Purchased machinery on credit from Rangan. So here the two accounts that are affected are the machinery account and the Rangan account. Okay. The machinery account and the Rangan account. So machinery comes under real debit what comes in, credit what goes out. Here the furniture comes into the business. They are purchasing the machinery means they comes into the business. So we are debiting the machinery account. And the next one is the Rangan account. So Rangan comes under personal account, debit the receiver, credit the giver. Okay. Sorry for disturbance. ಪಕ್ಕದಲ್ಲಿ the birds crows right. So here purchased machinery on credit from Rangan means we have machinery and the Rangan account. So machinery comes under real, debit what comes in. So we are going to debit the machinery account. And the next thing is the Rangan account comes under Rangan means the name of the person should be under personal. So personal debit the receiver, credit the giver. So Rangan here he is the person who is the giver of the furniture. So we are going to credit the Rangan account. So here first we put on the date. What is the date of the transaction? That is January 3. So here the date of the transaction is January 3. So all the transactions are belongs to the same month. So just I put the number 3. Here machinery account should be debited. Machinery account debited to Rangan's account. Okay. What is the amount of machinery? 50,000. Being machinery purchased. So one point to be noted is that is when we are buying an asset will not be considered as purchases. So purchases means when we are buying goods for the business, for the purpose of reselling. Okay, for the purpose of reselling, that is they will be considered as the purchases. So when we are buying the asset for utilization in the business, they will be considered as just the asset and not the other goods. Okay, so it will be recorded as the machinery account or buildings account or whatever the name of the asset will be recorded. And the next transaction is bought furniture from Ramesh for cash. Okay, bought furniture from Ramesh for cash. So here next thing to be noted is when we are buying or purchasing for cash means, so if the transaction has the name of the person means that is the name of the person is not affected, so we have to ignore that one. Okay, the name of the person has to be ignored when the transactions are in cash. So here the mode of the transaction is cash transaction. So we need to record only, we need to take the two accounts or that is they are buying the furniture. Okay, so bought furniture from Ramesh or cash means, so the furniture and cash, these two accounts are affected in this business, in this transaction. Okay, these two accounts are affected. One is the first, we take the furniture. Okay, furniture comes under real debit what comes in, credit what goes out. So the business is purchasing the furniture means, that is comes into the business. So comes into the business means we need to debit the furniture. And the next one is the cash. Okay, cash means that is comes under real debit what comes in, credit what goes out. So we, that is the cash goes out of the business for the purpose of buying the furniture. That should be did. Okay, so here the first furniture account should be debited and the cash account to be credited is the transaction. What is the date of the transaction is January 6. January 6, furniture account debit to cash account. Okay, the amount of purchase for cash is rupees 25,000. Okay, 25,000. Being furniture bought. Okay, the next transaction is goods sold to Yashoda. Goods sold to Yashoda. If the transaction is just with goods sold for rupees 5,000 means it signifies there is no credit and the transaction was taken place on the cash basis. Okay, so if the name of the buyer goods sold to Yashoda means it signifies that the transaction was happened on credit. So it should be assumed as the transaction was happened on credit basis. So the two accounts are affected here is the sales account and the Yashoda account. Okay, name of the person are affected. First we take on the Yashoda. Okay, Yashoda is the name of the person, comes under personal, debit the receiver, credit the giver. So he is the receiver of the goods. Yashoda is the receiver of the goods. Who is the giver of the goods? That is we, the business people, or the giver of the goods. And he, Yashoda is the person who is receiving the goods. So debit the receiver. So Yashoda's account should be debited. And the next one is the sales. Sales means we can take it as, that is the sales can be considered either under the goods. Some people are assumed as the goods and some are considered as nominal. If we take on the goods concept, okay, if we take on the goods concept, it means it comes under the real account debit what comes in, credit what goes out. Here the goods goes out of the business, so therefore that is the same should be credited. So how the entry should be recorded is date of the transaction 12 Yashoda as account debit to sales account. Okay, to sales account. What is the amount? 22,500. Being goods sold to Yashoda. Okay, this is the final. This is the entry for this transaction. Okay, and the next one is goods returned by Yashoda. Here, the two accounts that are affected are Yashoda's account Okay, Yasodha's account. And the next one is the goods returned account. Okay, so first we take on the Yasodha's account. Yasodha's means it is the person that refers to. Yasodha comes under personal debit the receiver, credit the giver. So goods returned from Yasodha. That means Yasodha is giving the goods. So here the personal account debit the receiver, credit the giver. Okay. So here we need to take on the giver. Okay. So that is the Yasodha's account to be credited. And the goods returned account means when the goods are returned comes under real debit what comes in, credit what goes out. Here when the goods are returned into the business means that the goods are coming back into the business, that is it comes into the business, so it should need to be debited. So when the sales account are credited means the sales returns account should be debited. So the goods returned should be written as sales returns account. If we are returning the goods means that should be treated as purchases returns account. Okay, so here the transaction is just vice versa, and date of the transaction 13. Okay. 13. Here sales returns account debit to Yasodha's account. How much of the goods worth are returned? 2,500. 2,500. The goods returned from Yasodha. Okay, this is the next transaction we completed. And the next one is the goods sold for cash. When the goods are sold for cash means that should be treated as here. Okay, when the goods are sold for cash means here the two accounts are affected, are the goods account, that is the sales account and the cash account. So both are comes under the category of the real account, debit what comes in, credit goes out. So here the cash comes into the business, goods goes out of the business means cash account data to sales account. So the date of the transaction is 15, goods sold for cash. 15, goods sold for cash means cash comes into the business to sales account. Amount is 50,000. The goods sold for cash, right? Therefore, we completed the cash transaction. Next one is the 17, bought goods for cash. So bought goods for cash means purchases account and cash account are affected. So purchases account and cash account are affected means, so when we are buying the goods means that is the goods comes into the business, so therefore the purchases account should be debited and the cash goes out of the business. So the cash account to be credited. So bought goods for cash 17, date of the transaction is 17, purchases account debit to cash account. What is the worth of goods? 25,000. B, goods purchased. Okay, B, goods purchased for cash can be added. And the next one is the cash received from Yasoda. Cash received from Yasoda. So cash received from Yasoda means the two accounts that are affected are cash account and Yasoda account. So cash account means comes under real debit what comes in. So cash account should be debited, and the Yasoda's account should be comes under the personal. So personal debit the receiver, credit the giver. So Yasoda is the giver of the cash. So we need to debit the cash account and the Yasoda account should be credited. Cash account debit to Yasoda account. Okay. So what is the date? 20. How much they are receiving? That is 10,000. 10,000, and here also 10,000 being cash received. Being cash received from Yasoda. Okay. So this is the journal entry for this one. And the next one is cash paid to Ramala. So cash paid to Ramala means cash under Ramala account are affected. Ramala comes under personal, debit the receiver, credit the giver. So cash paid to Ramala means that is the Ramala is receiving the cash. So she is the receiver of the cash. Okay. So debit the receiver, credit the giver. So Ramala should be debited, and the cash means that is cash paid to Ramala. So cash goes out of the business to Ramala. So cash goes out of the business means that the cash account should be credited. So date of the transaction 21 Ramala account to cash account. So Ramala account debit to cash account. How much? 20,000. Cash paid to Ramala. Okay. Next transaction is cash withdrawn from bank. Date of the transaction January 25. So cash withdrawn from bank means two accounts are affected, or cash account and bank account. First we take on the bank. Bank means it is an institution, so it comes under personal. So debit the receiver, credit the giver. So that is cash withdrawn from bank. So here the bank is the giver of the cash. Giver of the cash means personal account, debit the receiver, credit the giver. So credit the giver means we need to credit the bank account. And the next one is the cash account. So cash account means it comes under real debit what comes in, credit what goes out. So real debit what comes in means that is the cash account should be debited. So if they are mentioned cash withdrawn from bank means this transaction simply refers to for the official purpose of the business. So if the transaction is like this, that is cash withdrawn from bank for personal use, so they will be considered as the drawings account. It should not be written as cash account. So here we make the next entry here, January 25. We make use of this first space. Okay. Okay. 25. So January 25. Here bank is done, given, therefore should be credited, and cash comes into the business, so cash account data to bank account. Cash account debit to bank account, being cash withdrawn. Okay, being cash withdrawn. So what is the amount given is 50,000. Okay, 50,000 should be written. 50, and here also the same 50 is recorded. So therefore in this today's class we discussed the journal entries for 10 transactions, 10 business transactions. We shall discuss in the next class. Okay, we shall meet in the next class. Thank you all.